So what is credit card churning? A lot of you guys have heard about that. Is it something that's a good thing or a bad thing? Should you be doing it? Let's break it down and talk about it in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and better banking. If you're new to the channel, make sure to click subscribe, click the bell, so that way you get notified on any and all of our future content. So in today's video, we're going to be talking about what is credit card churning. Okay, and many of you and so many people have reached out to me on the channel here, asking, what about this credit card churning? Is this something that I should be doing? And so just to break it down, what is credit card churning? Okay, and this is the process, okay? Because many times when you sign up for a new credit card, they're gonna give you some type of special offer, whether that's points, maybe it's miles, whatever the case may be, but they have these different promotional offers. And many times you wanna go ahead and get that. They might require you to spend a certain amount of money within a certain amount of time in order for you to get that bonus or get those points. So you sign up, you get the card, and then once you've achieved the bonus, okay, you immediately cancel the card, right? So you open the line of credit, get the bonus, cancel the line of credit, okay? And then from there, look to rinse and repeat that process. Okay, so perhaps you had a specific bank with a MasterCard that had great points program, and you did this, right? You started up the account, over 90 days, spent whatever they wanted you to spend. They usually call it a minimum spend. Typically it's, again, depending on the line of credit, they want you to run anywhere from $1,000 to $5,000 worth of transactions through the card over that 90 days for you to get that bonus or those points, whatever the case may be. But then again, you're closing the account. And now, okay, so you're thinking about that. So, okay, credit card churning. So start the account, get the bonus, then cancel the account. Why would I want to do that? Okay, so the thought process behind that is that you could then sign up with a card again and get the same bonus. Okay, so you could just literally rinse and repeat that process of sign up, get the bonus, max it out over the 90 days, whatever the case may be, and then cancel the card. They would go out and find 2, 3, or 4 credit cards like this, open them all up at once, use them all to the maximum to get that bonus on each of them, and then cancel all of the lines. And then once they've been canceled, go ahead and reapply, for those lines, for those same lines of credit. And that way they could restart and get those bonuses again, okay? So that's credit card churning. And obviously, the thought process behind it is, hey, you could rack up more miles, you could rack up more points. Some of these bonuses that different credit cards offer are incredibly lucrative. And we're actually going to create an entire video series all about credit cards and how to get these, the right way, to get these bonuses and really how to utilize these lines of credit. But back to credit card churning, you start the line, get your bonus, cancel the line, and then hope to reopen the line to go ahead and get that bonus again. And some of the drawbacks of doing this, okay? Number one is many banks are now kind of hip to this strategy. Especially American Express is making it very, very difficult. If you close an account, for you to go ahead and reopen another account with that bank is gonna be very, very, very difficult. And that's really the main pro, is just having the ability to try to rack up additional points or miles by taking advantage of those bonus programs. But there's a lot of cons to doing credit card churning. And the number one thing is you got to take a look at your credit. When you are opening accounts and closing accounts, number one, every time you're opening an account, you are dinging your credit. That is a hard inquiry on your credit. And if you have too many of those, you're going to make it much, much more difficult on yourself to acquire or be able to reopen new lines of credit. Too many dings, and typically a inquiry is going to stay on your report for up to 2 years. So if you get too many dings in too short of a window of time, it's going to be very difficult. So you might, get started with this strategy and then you cancel the lines, and then now you can't open more lines because you got too many inquiries on your credit. Most banks don't like to see that. Secondly, if you're looking to acquire some type of long-term financing, like a big loan, like a mortgage or something like that, and you're opening and closing accounts, during a time where you're looking to potentially buy a house or buy a property, even certainly if you're in the process, you don't want to be opening and closing any accounts. But if you're looking to actually buy a home, let's say in a year or something like that, I mean, the banks are going to see this. When they pull your credit, then to qualify you for a big mortgage, they're going to see all these opening and closing of accounts. And it could draw some suspicion as to why you're doing that. It could cause you to get disqualified. It could cause you to not qualify for that loan that you're going for. And again, with all those additional inquiries on your credit, it could make things more difficult. And also as well, one key point about credit card churning is that it's not for individuals, because I get it, it's really exciting to sign up for a new line of credit and then get those rewards. Sometimes these bonus programs can be worth physically anywhere from $400, $500, $600 in real world value with some of these bonus programs. And again, we'll discuss some of those in some different videos of ones that I really like. But again, if you're not really organized, and again, credit card churning is just one of those things that it does take an incredible amount of discipline. And another thing I just don't like typically, another thing I just don't like about this strategy is the closing of lines of credit. That's something that, and again, many people may have a different opinion on this, but I'm not someone that necessarily likes to close lines of credit. I have many lines of credit. And as a matter of fact, length of credit history is one of the big factors in your overall credit score. And over the years, I've had plenty of different lines of credit, and I still have, gosh, obviously I don't have it on me, but I have an old, a Visa credit card. It's like a Best Buy, if they're still in business, but a Best Buy like reward zone credit card, and it's through Citi, right? But I've had that line of credit, I don't know, for over 15 years, right? And even though it's a low limit card, I do not use the card. I maintain it, and it's not something that I'm going to close because that line of credit factors into my average length of history, or my average age of a line of credit. So, I'm going to maintain that line. And that, good thing for me on that line is there's no annual fee, so I don't have to pay anything to keep it. And so there's absolutely no reason for me to close that line of credit. And another thing about closing lines of credit is that it will actually affect your debt ratio, right? So let's say you had $100,000 worth of available credit and you had a $50,000 balance on that credit, which would be high. That would be 50% utilization, right? But if you took that $100,000 available credit and said, okay, well, I'm just going to close $25,000 worth of lines and brought it down to 75, and you're still at 50. Well, now you're using a higher percentage of your total utilization. So your utilization percentage will go up if you are closing lines of credit that have available credit, which is something that could damage your credit score. Throwing your utilization up, when you start seeing utilization up over 20, 30%, okay, you run the risk of your credit score starting to suffer. So closing accounts and losing available credit, again, it just shortens your window there. If you're carrying any kind of a balance, you're going to get closer to the ceiling if you close available credit. So I'm somebody that when you have lines of credit, especially if there are no fees to keep those lines of credit open, you keep those lines of credit open. And occasionally, what we'll do is we will run transactions. A lot of times, banks will have, hey, to maintain your line, you have to use it. Right, so they'll usually be anywhere from 18 month to 24 month, sometimes 36 months, and then you might get a letter from your credit card company saying, hey, you need to use this line or we're going to deactivate it. And then from there, make a couple of small transactions, pay them off immediately, keep that card happy, right? And that way you can maintain that line. And so that's what we do with all of our different lines of credit. In my eyes, there's really no reason to cancel a line of credit. Now, if your idea is to get more points, okay, instead of closing the line, okay, pay it off all the way down to zero, and then give them a phone call and renegotiate. Give them a call and say, look, I would love to park, the balance over here again, but I'm not interested in paying this interest. I just got this sweet bonus from you guys. I'd be willing to do this again if I could qualify for another bonus, okay? So you could try to renegotiate and see if you can get the bonus that way versus canceling the account. let them know you were considering canceling the account. Perhaps there's a different card out there with a different bonus program that you could refer to, okay, and say, look, I'd rather keep this line right here. Could you offer me this bonus so that way I could continue to use this line of credit and stay here? So you could call that card company and renegotiate. Or the next thing, okay, and obviously you don't want to get into the habit of just applying for tons of lines of credit. You always want to apply for lines of credit with a reason and with a purpose for why you're wanting to acquire that tool. If you're really looking for another bonus offer and your numbers are good, go out there and seek another line of credit. Again, if you tried to negotiate with them to get the bonus again or get another bonus or an extension of bonus and they denied you on that and you have the credit, go out there and find a new line of credit. Put that one literally on the shelf. Okay, let it sit for 6 months. Let it sit for 12 months. Okay, without you touching it. Maintain a zero balance. That is bettering your credit because you have 100% utilization there that you're not touching. And then you find a new line of credit that's going to give you the bonus that you're looking for. Okay. So that's my take on credit card churning. That's what it is. Again, the process is, sign up for a bunch of lines of credit that have bonus programs, use those lines of credit to get those bonuses, and then cancel those accounts. And then from there, look to reapply so that way you can get those bonus terms again. And again, we talked about some of the pros of that. I mean, obviously you're looking to rack up rewards, you're looking to rack up miles, whatever that card is offering. But again, there's a ton of cons that you really need to consider. And for me, the main ones are closing lines of credit and reducing your available credit ratio, bringing it down by canceling lines of credit. Length of credit history is something that's very important to your overall credit score. And so you don't want to get into the habit of closing a lot of your accounts. Let those accounts age and they will better your scores. And again, instead of canceling the account, call them and renegotiate. They may be very willing to offer you another bonus to maintain and keep your business. From there, if they don't, put the card on the shelf for 12 months, 18 months without you using it. Grab another line that has given you a bonus, okay? And then you may be able to go back to them in 6 months and say, hey, I'd love to come back to using this line of credit. Can you offer me another bonus promo like I got a year ago when I started this line? I'd love to use this line again. So a lot of times with just a little bit of time of you not using the line after showing that you will use a line of credit, a lot of times bank will want you to get back over here and start leveraging our line again. So maybe a little time, sometimes just giving it 6 to 12 months, will get that bank to warm up and to renegotiate and to get you a bonus again to get you actively using the card. So again, guys, there's my take on credit card churning. If you found value in this training, give it a comment, give it a like below. I'll see you guys in the next video.